Imagine waking up to see a major health stock, one you know, skyrocket 15% before the markets even had its coffee. That's exactly what happened this morning, and Wall Street is buzzing. This isn't a penny stock. It's a telemedicine leader that suddenly found a massive tailwind. The trading floor was electric, with everyone scrambling to figure out what triggered this legendary move. We're about to break down the catalyst, the financials, and whether this is just the start of a bigger comeback for this healthcare innovator. If you love fast-paced financial analysis, hit like, share, and follow for more updates. Now, let's reveal the name behind this market-moving event. The company behind today's surge? Teladoc Health, ticker TDOC, the virtual healthcare giant that became a household name during the pandemic. Teladoc connects patients with doctors, therapists, and specialists 24/7, revolutionizing how millions access care. The stock soared during lockdowns, then crashed as in-person visits returned and competition heated up. Despite a painful decline, Teladoc's business kept growing, expanding services and solidifying its leadership. Today's 15% jump is a dramatic signal that Wall Street may finally be waking up to its long-term potential. Teladoc's mission: make healthcare accessible, affordable, and convenient for everyone. The sleeping giant of telemedicine may have just been jolted awake. Let's find out what flipped the switch. What sparked Teladoc's 15% surge? A single bullish tweet from Citron Research, famous for short selling, completely flipped the script. Citron, led by Andrew Left, is known for moving markets with bearish calls, so when they turned bullish on Teladoc, everyone paid attention. Their post wasn't just positive, it was a full endorsement, painting Teladoc as a company on the verge of massive transformation. The market reacted instantly. Algorithmic bots and human traders alike piled in, sending the stock soaring. This is the power of a major research firm in today's market. One post can trigger a tidal wave. Citron's bullishness forced even hardened skeptics to reconsider. The report wasn't just a price target upgrade, it was a deep thematic argument. And the game-changing technology at the heart of their thesis: artificial intelligence. Let's dive into why AI is suddenly the hottest story for Teladoc. Citron's thesis boils down to two letters: AI. They argue Teladoc is poised to lead in AI-powered healthcare, a narrative the market has missed. AI could help doctors diagnose more accurately, personalize treatments, and monitor patients in real time. For Teladoc, integrating AI means serving more patients, improving care, and boosting profitability. AI chatbots could triage mental health patients, while chronic care management could become proactive and data-driven. Citron sees Teladoc evolving from a video call company to a true healthcare tech leader. This reframes the investment case. If Teladoc builds a superior AI platform, it could leave competitors behind. The company with the best data and algorithms wins. Citron's report says the market is valuing Teladoc as a service provider, not as a high-growth AI tech company. That's why the stock exploded. But was AI the only catalyst? Citron also cited the end of the recent government shutdown as a bullish factor for Teladoc. The logic: shutdowns disrupt federal health programs, so resolving one could boost healthcare stocks. But was this really the main driver? The shutdown was brief, and Teladoc's decline has been a long-term trend. The shutdown's end may have helped, but it was likely just a supporting factor. The real excitement was the AI narrative. Citron's vision of Teladoc as an AI powerhouse. The shutdown provided a timely news hook, but AI lit the fuse. The market's sudden awakening to Teladoc's tech potential is the real story. The shutdown may have cleared the skies, but AI started the fire. Now, let's look at Teladoc's numbers. Before we dig into the financials, a quick word from our sponsor, the Value Stocks Investing Master Course. This course is your blueprint for becoming a smarter, more confident investor, teaching you how to spot value, analyze companies, and build a resilient portfolio. Learn to read financial statements, calculate intrinsic value, and identify companies with real competitive advantages. It's about empowering you to make your own intelligent investment decisions. Whether you're new or experienced, this course will sharpen your skills. Investing isn't a gamble with the right education. Check out the Value Stocks Investing Master Course to take control of your financial future. Now, back to Teladoc's numbers. Let's crunch the numbers and see what's really going on beneath the surface. Even after today's pop, Teladoc trades at a price-to-sales ratio of just 0.66, dirt cheap for a tech-enabled leader. In a world where most tech stocks are priced for perfection, Teladoc stands out as a rare exception. This isn't just a low number, it's a signal that the market has all but written off the company's future prospects. But is that fair, or is there more to the story? The market had thrown in the towel, but the business kept generating serious cash, $2.54 billion in sales over the last year. That's not a small feat, especially in a competitive healthcare landscape. Teladoc's revenue stream is robust, and it's not just a flash in the pan. The company has built a platform that millions rely on for virtual care, and those numbers reflect real demand, not just hype. Free cash flow? $292 million in the past year. Money that can pay down debt, buy back stock, or invest in AI. This is the kind of financial flexibility that gives a company options, even when the market is skeptical. It's a war chest that can be deployed strategically, whether to shore up the balance sheet or to fuel the next phase of innovation. The stock trades at just 5.3 times trailing free cash flow, astonishingly low. For context, that's a multiple you'd expect from a company in decline, not a tech firm with a growing user base and a foothold in a massive industry. It's a valuation that suggests the market is bracing for the worst, but the numbers tell a different story. Many mature companies trade at 15-20 times. Fast-growing tech firms go much higher. Teladoc's current valuation puts it in the bargain bin, even though its fundamentals are far from distressed. This disconnect between price and performance is what value investors dream about, if they have the courage to act. At this valuation, the market has zero faith in Teladoc's future. Investors are pricing in stagnation, or even decline, as if the company's best days are behind it. But is that really the case, or is the market missing something crucial? But if AI reignites growth, this is a classic value play with a tech kicker. Imagine what happens if Teladoc leverages artificial intelligence to improve patient outcomes, streamline operations, or unlock new revenue streams. Suddenly, the narrative shifts from stagnation to resurgence, and the stock's upside could be dramatic. The numbers show a real cash-generating business, ignored by the market, but not for long. As the dust settles and investors look for value in a crowded market, Teladoc's fundamentals could start to attract attention. The company's ability to generate cash, invest in innovation, and serve a growing customer base sets it apart from the pack. Is this a bargain hiding in plain sight? Sometimes the best opportunities are the ones everyone else has given up on. Teladoc might just be one of those rare gems, overlooked, undervalued, and waiting for a catalyst. Let's weigh the risks and rewards. Every investment comes with uncertainty, and Teladoc is no exception. But with strong cash flow, a low valuation, and the potential for AI-driven growth, the risk-reward equation looks compelling. What do the bears say? They'll point to competitive pressures, regulatory risks, and the possibility that virtual care growth could slow. These are real concerns, and they shouldn't be ignored. And do the bulls have a credible rebuttal? They'll argue that Teladoc's platform, brand, and cash flow give it staying power, and that the market is underestimating its ability to adapt and thrive. The debate is far from settled, but one thing is clear: Teladoc's story is just getting interesting. When it comes to Teladoc, the debate is fierce and opinions are sharply divided. On one side, the bulls are energized by the promise of an AI-driven healthcare revolution. They see Teladoc as a company with robust cash flow, a rapidly expanding digital footprint, and a valuation that looks like a steal compared to its long-term potential. For these optimists, Teladoc is a slam dunk, a rare opportunity to invest in a leader at the forefront of a massive industry shift. They point to the company's innovative use of artificial intelligence to streamline patient care, reduce costs, and improve outcomes, believing this technology will set Teladoc apart from the competition for years to come. But smart investors know that every coin has two sides. The bears are quick to highlight Teladoc's challenges: slowing revenue growth, intensifying competition from both established healthcare giants and nimble startups, and the lingering shadow of the $6.6 billion Livongo write-down, a deal that many see as a costly misstep. They worry that Teladoc's best days might be behind it, and that the company could struggle to regain its former momentum. Skeptics argue that telehealth is quickly becoming a commodity, with new entrants flooding the market and driving down prices. The barriers to entry are low, and as more players join the fray, profit margins are under constant pressure. For these critics, Teladoc's business model is at risk of being disrupted by cheaper, faster, or more innovative competitors. While the AI narrative is undeniably compelling, the bears demand more than just promises and projections. They want to see hard evidence, tangible results that prove Teladoc's technology can deliver real value at scale. Until then, they remain unconvinced, wary of getting swept up in hype that may not translate into sustainable growth. These skeptics caution that today's surge in excitement could easily fade, just as quickly as it arrived. They've seen market darlings rise and fall before, and warn that Teladoc's current momentum might not last if the company can't back up its story with consistent performance. But the bulls aren't swayed by short-term setbacks or negative headlines. They argue that the market is too focused on past mistakes and is overlooking the company's future potential. In their view, Teladoc is just getting started, and the real growth story is still ahead. The Livongo write-down, they say, is old news, already baked into the stock price. What matters now is how Teladoc leverages its technology, data, and partnerships to shape the future of virtual healthcare. Supporters point to Teladoc's unmatched scale, trusted brand, and deep relationships with healthcare providers and insurers. These assets, they argue, create a competitive moat that's not easily replicated, giving Teladoc a strong foundation to build on as the industry evolves. For the bulls, this is a once-in-a-decade chance to buy a category leader at a huge discount before the full impact of AI and digital health transformation is realized by the broader market. Ultimately, this is the classic Wall Street battle. Past performance versus future potential, skepticism versus optimism, risk versus reward. The outcome will depend on whether Teladoc can deliver on its ambitious promises and prove the doubters wrong. So, as the debate rages on, the question remains, which side of the Teladoc coin are you on? The Teladoc debate is a perfect example of the daily challenge investors face: conflicting opinions, high stakes, and endless noise. That's why education is key. The Value Stocks Investing Master Course is your toolkit for financial success. Learn to analyze companies, spot undervalued gems, and build a resilient portfolio. New modules cover tech companies like Teladoc, focusing on cash flow, user growth, and tech moats. Join our community, access resources, and get the skills to build lasting wealth. Don't let another opportunity pass you by. Enroll today. Invest in yourself, and for even more, check out our Stocks Galore Patreon for exclusive analysis and trade alerts. Now, let's wrap up with the big question. Is Teladoc the future of healthcare? So, what does this all mean for Teladoc? After years of volatility and skepticism, the company is suddenly back in the spotlight. Investors and analysts alike are asking whether this is the beginning of a new era for the telehealth pioneer, or just another fleeting moment of hype. Teladoc has weathered storms before, but today's developments could mark a turning point. Today's 15% surge signals a dramatic narrative shift. It's not just a blip on the radar. This kind of move reflects renewed confidence and a sense that something fundamental has changed. For a company that's been battered by doubts, this is a breath of fresh air, and it's got Wall Street buzzing. A rock-bottom valuation, strong cash flow, and a new AI-driven growth story have created a potent rally cocktail. Investors are waking up to the fact that Teladoc isn't just surviving, it's evolving. The company's ability to generate cash, even in tough times, is a testament to its underlying business strength. Now, with artificial intelligence at the core of its strategy, Teladoc is positioning itself as a leader in the next wave of digital healthcare. The move was sparked by Citron, but fueled by fundamentals ignored for too long. Citron's endorsement may have lit the fuse, but it's Teladoc's improving financials and strategic vision that are keeping the fire burning. For years, critics focused on the company's challenges, but now, the conversation is shifting to its potential. Telehealth's long-term outlook is strong, convenient, cost-effective, and here to stay. The pandemic accelerated adoption, but the real story is how virtual care is becoming a permanent fixture in the healthcare landscape. Patients love the flexibility, providers appreciate the efficiency, and insurers see the cost savings. Teladoc is at the center of this transformation, shaping how millions access care. The key: can Teladoc leverage AI to build a durable advantage? Artificial intelligence isn't just a buzzword here. It's the engine that could drive smarter diagnostics, personalized treatment plans, and better patient outcomes. If Teladoc can harness AI to deliver real value, it could set itself apart from the competition and redefine what's possible in digital health. If they execute, this could be a generational buying opportunity. We're talking about a company with the potential to disrupt a trillion-dollar industry. For investors with vision and patience, Teladoc's current position could be the entry point they've been waiting for. But, as always, execution will be the deciding factor. Risks remain, execution is everything, and competition is fierce. The digital health space is crowded, with giants and startups alike vying for market share. Regulatory hurdles, technological challenges, and shifting consumer preferences all pose threats. Teladoc must innovate relentlessly and deliver on its promises to stay ahead. But for the first time in years, the bulls have a credible, forward-looking story. There's a sense of optimism that hasn't been seen in a long time. Teladoc's renewed focus on technology, financial discipline, and patient-centric care is resonating with investors who believe in the future of digital medicine. So, what do you think? Is this the dawn of a new chapter for Teladoc, or just another twist in a volatile journey? Your perspective matters, and we want to hear from you. Is Teladoc the future of AI-powered telemedicine, or just a flash in the pan? Will it lead the charge in transforming healthcare, or will it be overtaken by faster, more agile competitors? The debate is just getting started. Let us know in the comments, and don't forget to like and subscribe for more market-moving analysis. Your engagement helps us bring you the latest insights and deep dives into the companies shaping our future. Thanks for watching. See you on the next trade. Booyah. Stay curious, stay informed, and keep questioning the future of healthcare.